In this lecture example, we look at section 8.5, which is our lease recoupments. Now guys, remember what I want you to understand here. You need to always understand what was the total deductions claimed by the lessee for lease payments. That is always the maximum amount the recoupment could ever be, and you compare that to the benefit that you've received. In simple terms, this is actually what you do. So let's take a look at it. You'll see in this example I've used two companies, A Limited and B Limited. A Limited is the lessee, so the person who is leasing from someone else, the person who is paying, and B Limited is the lessor, so the person who receives rental income. So A Limited is a registered VAT vendor with a 31 December year end. All amounts below exclude VAT. On the 1st of January 2013, A Limited entered into an agreement with B Limited. In terms of the agreement, A Limited would lease a manufacturing machine from B Limited for a period of 36 months at a monthly rental of 1 million rands. At the end of the lease, B Limited sold the machine to A Limited at its market value of 4 million rands. In terms of the agreement, the lease payments made by A Limited was set off against the cost of the asset, and A Limited only had to pay the balance of 1 million. Right, so total deductions claimed in the past, 36 months times 100,000 rands a month, so 3.6 million rands. That is what you've claimed under section 11A as a deduction. Now, at the end of the lease, so the lease now ends, now you ask, what is the arm's length value? The arm's length value of this asset is its market value of 4 million rands. Less how much did you pay for it? They tell you that you've only paid 400,000 rands for it. So 3.6 million rands is the benefit that you are receiving. Now you compare that benefit to what you've paid in the past. You want to tax the full amount, but you can't tax more than the past. In this case, you can see it is equal to the past amount. So the recoupment amount that you will be including in your rands column under section 8.5 is 3.6 million rands. Okay, then guys, an important concept to just remind you of here, it's nothing to do with lease recoupments, just to remind you, this machine, right, when the lessee now gets it, so A Limited, you must remember that you can only claim section 12C allowances if you've never used it before. So because A Limited has used it before, they can't qualify section 12C allowances, and they must only claim wear and tear on the asset. Example 2, A Limited is a registered VAT vendor with 31 December year end, all amounts exclude VAT. A Limited leased an asset from B Limited for 36 months that commenced on the 1st of Jan. On the 31st of December 2015, so 36 months, the lease came to an end. At this time, the fair market value of the asset was 4 million rands. Okay, so they give us the fair market value. Remember, you can also calculate it if they don't give it to you by using the reducing balance method. Now, what are the section 8.5 implications if A Limited paid 4 million rands for the asset at the end of the lease, and the total lease payments made by A Limited over the 36-month period is 2.5 million rands? Okay, so just to show you again, you can always use our approach. We say, well, you must just know what the total deductions are. Total deductions, 2.5 million rands. Right, then the benefit that you've received. The market value of the asset is 4 million rands. Right, how much did you pay for it? 4 million rands. So what benefit did you get? Null. So if there's no benefit for you, then there will be no lease recoupment. So this is arm's length, so there's no recoupment. B, A Limited pays null for the asset at the end of the lease, and the total lease payments were 2.5 million. Okay, so situation B, 2.5 million is still correct. Now they tell you though that this person pays nothing for this asset. So the benefit that you get is 4 million rands. This is the benefit. Now, we want to tax you on the full 4 million, but you've only claimed 2.5 million in the past, so that is then the limit. So the section 8.5 recoupment in this case will be 2.5 million. C, A Limited pays 0 rands for the asset, and the total lease payments made by A Limited over 36 months was 4.5 million. Okay, so let's go and change this then. So the total deductions is 4.5 million rands. The market value of this asset at the end of the lease is 4 million rands, and you pay 0 for it. So the benefit that you receive, 4 million minus 0 is 0. So that is the amount that they want to tax you on. The maximum that they can ever do is 4.5. So the lower of the two is the 4 million in this case. So section 8.5, 4 million. The situation C, 4 million. D, A Limited pays 1 million rands for the asset, and the total lease payments were 1.5 million. Okay, so let's get this out of the way. What did I say now? D, total lease 2.5. Okay. So our total lease deductions, 2.5 million rands. We paid 1 million rands for this. So market value less the amount paid is 3 million rands. We want to tax you on the full benefit. Maximum can be 2.5 million rands. So section 8.5, 2.5 million. E, he pays 1 million rands for the asset, and the total lease payments were 4.5. Okay, so total lease payments 4.5, still pays 1 million. So you want to tax the total of 3 million. Maximum you can tax is 4.5 million. So 3 million rands will be taxed. Right, guys, that's as simple as it is. Now let's take it a little bit further. Example 3. A Limited is a registered VAT vendor for 31 December year end. All amounts exclude VAT. A Limited leased an asset for a period of 36 months. Total lease payments were 100,000. On the 31st of December, B Limited indicated that A Limited could continue using the asset, but that there would be no more lease payments. What are the implications if the fair market value of the asset is 2 million? Right, so that's the first one. So first we start with total deductions. How much is the total deductions that we claimed? 100,000 rands for 36 months. So 3.6 million rands is what we claimed. Right. The market value of this asset is 2 million rands. Less any consideration that we paid to get it. Nothing. So our benefit, 2 million rands. So we want to tax on the full 2 million. We could tax on a maximum of 3.6 million. So what is our section 8.5 benefit here? 2 million. Okay, now situation B. The market value of the asset is not available, but the original cost of the lessor was 4 million rands. So what they're referring to here is they're saying this market value, so this process will be following, this market value over here, we don't know what that is. And as you can see, we need to know that. Now, if you don't know what that is, if that's not available, this is what the commissioner says you must do. You take the cost of the lessor, and you see how many years have passed. In this case, 36 months have passed, so 3 years have passed. It only works on complete year periods. So what it then says you should do is you say 4 million rands times 80%, so you deduct 20% for year 1, times 80% for year 2, times 80% for year 3. This is the reducing balance method at 20%. So that gives us 2048 million. that is the amount that you then use as your market value in this calculation that we keep doing. 2048. So the benefit is 2048. That is the benefit. The maximum that we can be taxed on is 3.6 million. So our benefit is 2048. And that is the only thing that you need to understand, guys, about this market value. If you don't have it, you must be able to calculate it. And if you go up to all of the questions we did on going up, we used market value. Can you see everywhere when we do this? So that is the market value, how you must calculate it if you are not given that answer or if the commissioner is not satisfied with the value. Then, guys, now we're looking at the next example, and this is where the lease comes to an end, and then you can continue leasing it. Now, I'm going to remind you the following. They said, if the lease payments are nominal, you are treated as if you received the asset for free. So if the lease payments are nominal, you are treated as if you received the asset for free. When is it nominal? When it's 10%, less than 10% of the value of the asset. So let's start with it. A Limited is a registered VAT vendor of the 31 December year end. All amounts exclude VAT. A Limited entered into a 36-month lease period on the 1st of Jan. In terms of this lease agreement, they must pay a monthly lease payment of 100,000 Rand. So total deductions that we can claim here, 100,000, or did claim, times 36 is 3.6 million rands. On the 31st of December, at the end of the lease, B Limited notified A Limited could continue leasing the asset from B Limited for a monthly rental of 10,000 rands, and A Limited accepted this offer. Now, what are the implications for A Limited if the fair market value of the asset is known to be 2 million rands? So guys, what is the difference between this question and the previous questions? In the previous questions, at the end of the lease, you did not get to continue leasing it. So you have to look out for when you continue leasing it. Now, what you need to do is that market value is important for us. It means then that nominal rent, the nominal rent limit, let's call it that, is 2 million rands times 10%. So 200,000 rands. If the annual rental is less than 200,000 rands, then it is considered nominal. Now in this case, the annual rental is 10,000 rands a month, so times 12, so 120,000 rands. So can you see that is less than our 200,000 rands? What they then say is the following. They say you must treat it as if you got this 2 million rands asset and that you paid for it nothing. So then, like we saw in all of the previous examples, I'm going to just show you, take you back. Market value less consideration. Market value less the amount paid, so amount consideration. See, everywhere we did it. Still the same process. So they say, this is what your assumption should be. If your annual rental is less than 10% of the value, you are treated as if you paid nothing for this. So the benefit that they want to tax is 2 million rands. The maximum amount that they can tax you on is 3.6 million rands. So in this case, situation A, section 8.5 will be 2 million rands. Okay, see now the next example. Situation B. What happens if the fair market value is known to be 1 million rands instead? Okay, so let's just clean everything up. So the market value is known to be 1 million rands. So when we now calculate our nominal rental limit, it is not 2 million times 10%, it is 1 million times 10%, which gives us 100,000 rands. So that is the amount that we must compare to our annual rental. So our annual rental is 120,000 rands, 10% is 100,000 rands. So because we are paying 10% or more of the annual value, this is considered a proper lease agreement, and it basically what it means is that if it's considered a proper lease agreement, there can't be a lease recoupment. So there is no lease recoupment whatsoever. See? Now I just change it a little bit and I say, what happens if the fair market value of the asset has not been determined, but the original cost was 4 million rands? So all we're saying is this market value, we don't know what it is. Now remember, if you don't know what the market value is, how do you determine what it is? You say fair market value, was it 2 million rands? Sorry, let me just make sure here. Sorry, it was original cost was 4 million rands. So the original cost was 4 million rands, and we had it for 4 years or 3 years. So times 80% for year 1, times 80% for year 2, times 80% for year 3. Gives us 2048. So all that we've now done with that 2048 is it tells us what our market value is, 2048. And once we know what our market value is, then we can calculate our nominal rent limit. So it will be 2048 times 10%. So 204,800. We can now compare our annual rental, 120,000, to that. Can you see what that means for us? It means we're not paying enough. It's less than 10%. So what is it we treat it as if we got this asset for? No money. We treat it as we bought the asset. So 2,048,000 rands. This is how much they want to tax us on. The max they can tax us on is 3.6 million. So they can tax us on the full 2048 million. Right, situation D. What happens if we don't know the market value of the asset, but the original cost was 2 million rands? So again, guys, this market value over here, we don't know what it is. Right, we don't know what it is, so we can't calculate the nominal rental limit. So how are we going to do it? By doing the same calculation we just did. So we'll say 2 million rands was the cost in the lessor, times 80% for year 1, times 80% for year 2, times 80% for year 3. 1024. Right? A nominal rent limit is then 1024 times 10%. So 102,400. We can compare that to our annual rental. Our annual rental is more than 10%, so we are not treated as if we got any benefit. We are treated as if this is arm's length, and therefore there is no recoupment. So guys, what I want you to see, what you basically do, the reason why they have this rule about nominal rent is they don't want, it's because if the person is not charging you at least 10% per year for it, they're saying you're paying too little for it, so the guy's just charging an amount for the sake of charging an amount. It's just nominal. So nominal means you're just doing it for the sake of it. Right. And that is not allowed. It must be a proper market-related rate.